Hey traders, welcome back to another daily profit and loss recap video. Today is Friday, June 2nd, and I locked in $1,185 in profits. Bounced back really nicely from yesterday's red day with a few solid winning trades in the stock MMV. And in this video, I'm going to break down these trades, talk about my thought process behind the trades, and hopefully you can take something and apply it to your own trading. Without further ado, the first and only stock that I traded today, I was one and done, was MMV. MMV was a big gap up this morning in pre-market. We could see it had this huge run down from under $1 per share up to a high in the pre-market session of $3.38. And it ended up opening for the day just under $3 per share. This was at the top of my watch list for a gap and go this morning. In the Market Master group, one of the things that we do every single morning is post the opening range breakout levels for some of the main stocks that are gapping up in the pre-market session. And today, one of those, of course, was MMV with an opening range breakout level of $3.60. The reason that was the opening range breakout level is because that was the high of the first 5 minutes of price action. So if we go ahead and just draw a line there at that breakout level, that is, of course, the high of this candle right here. We can zoom in and we can see that it pops straight through that level initially. And then the following candle, it kind of closes above that level and starts to push up to new highs. So like I said, I had a few trades today in MMV, but one of them initially was with this opening range breakout setup. It was a very quick trade and it was a very small profit on this trade as well because I locked in some profits in the 390s, and that was simply due to the fact that often these whole numbers like $4, $5, $6, whatever it may be, they end up becoming a level of what is known as psychological resistance or even psychological support. And that's just because of the fact that they are a whole number, and many retail traders like you and I would rather sell at a whole number of $4 as opposed to $3.99 or at $4.01. The same thing can sometimes apply to half dollars as well, so $3.50, $4.50, and so on and so forth. And that was kind of my thought process as to why I locked in some profits in the 390s. Emphasis on some because I didn't lock in all of my profits and I ended up getting out with the rest of them actually at a small loss. So because of that, the profits that I made locking in the 390s and the small loss that I took during this pullback kind of canceled each other out. And on that trade, I ended up with a very small profit. But the main trade today with MMV that I want to kind of put some emphasis on, this was a little bit later in the morning. We can see there is a ton of volatility out of nowhere here at about 10:20 in the morning. And up until that point, it was kind of just trading sideways, moving in a very small range, not a ton of volatility. However, it was trading with very large volume for the day. At that time, I think it was already trading over 50 million shares. So if we take a look in the Market Master group, what I posted was that MMV is most likely going to trap as many retail traders. Retail traders are just people like you and I that are trading from their homes. And after doing that, it's probably going to do the opposite of what these retail traders are expecting. In other words, it's most likely going to dip under 3 and then ramp back to the highs, or it's going to briefly pop above 4 and then get dumped. And if we take a look at the price action, this was posted at 10:08, so right here, we could see about 10 minutes later, what does it do? It dips briefly under 3, and then it ramps straight back up to 4, all within a 2-minute period. So not only did I post about that, that was actually my main trade in this stock today as well. It was a very, very quick trade. I actually had to use my hotkeys to get into this trade, which I rarely use. I bought a market order as it was bouncing back off of that 3 area in the 320s, and then I locked in profits up into this pop up near the high of day. So I knew that as it was bouncing back up here, when I took my position in the 320s, if it ended up being a failed bounce and it ended up rejecting VWAP, I of course had this low that happened just 1 minute ago of $2.95 that I could use as my risk level. So if it would have fallen back down, I would have maybe taken a 30-cent per share loss on this trade. But on the other side of the spectrum, there was much greater potential for a profit than just 30 cents per share. So the risk and reward on this trade was really favorable. There was a greater potential for profit than there was risk. And that is a really important aspect of trading. But with all of that being said, how did I know that it was going to dip under 3 and then ramp back to 4? The fact of the matter is that these stocks that have these very high volume spikes and then they kind of just trade sideways for a relatively extended period of time, they often end up being the most predictable, just like this one was, because of the fact that market makers, institutions, hedge funds, the traders that are using millions and millions of dollars to get in and out of these quick trades, they need a ton of volume to buy or sell their large orders. So when does most volume come into a stock? That's going to be either on a breakout or it's going to be on a breakdown. So you have to think about where most retail traders like you and I are going to have a stop loss order placed if they're long MMV. And in this case, it's probably going to be under $3 per share because that was the morning low. It's also at a whole dollar, which I just mentioned can be a psychological level of support. So in order for these market makers to buy, thousands and thousands, hundreds of thousands of shares in a very short period of time, they need retail traders to activate their stop loss orders and to sell all at the same time, all within a very small price range in order for them to buy a large amount of shares. Then on the other side of the spectrum, following that, once it starts to bounce back up and recover towards the highs, the only people really that are buying at that point are the retail traders that are chasing the stock back up to the highs. And at that point, the market makers are selling their shares that they just bought under 3 to the people that are chasing the stock. And that's why it ended up coming straight back down. So I know it sounds a little bit complicated, but that's just kind of the psychology that went behind this trade. You have to a lot of times think about what the general public, what the retail traders are going to do, and not necessarily do the exact opposite, but use that information to help you determine when to get in and out of your trades. So when it was all said and done on MMV, I ended up with $1,185 in profits. Solid way to end the week. Another trade that I want to just briefly talk about that I didn't get into, but I almost grabbed some shares in, was UCAR. UCAR, if we take a look at the bigger picture here, was a big mover the previous day. And this was at the top of my watch list today for a potential continuation. Most of the continuation ended up happening in after hours and in pre-market, so there hasn't been much upside this morning once the market actually opened. But what I do want to mention is the fact that it is so important to wait for some kind of confirmation to actually get into a trade. If you're guessing whether the stock is going to go up or down, you're simply gambling and there's really no edge in doing that. And in this case with UCAR, the confirmation that I was looking for, that I almost took a trade in, was the stock closing some candles above the VWAP. If we take a look at the morning here, at the market open, there's 1 candle, 2 candles, 3 candles, 4 candles, all with relatively long upper wicks on them, all that briefly spike above VWAP and then come straight back down. So during that point in time, there was no reason really to be buying into the stock, and this could have very easily rejected the VWAP once again and then came crashing back down to the lows. So I avoided this trade. Once it started to actually close some candlesticks above the VWAP, price was already up nearly to $14 per share, and with the pre-market high being $15.19, I just didn't see a ton of room for profit on this trade. But it is an important lesson that I just wanted to mention, to make sure you're looking for some kind of confirmation before getting into a trade, because once you have that confirmation, that's when you're actually applying strategy to your trading rather than just gambling. But anyway, those were the main focuses for me today on Friday, locking in $1,185 in profits. I know the trade with MMV was a little bit tricky, but that's why I wanted to break down the thought process and kind of the psychology behind the trade. So hopefully you found some value in it, and if you did, please make sure to give this video a like and subscribe to the channel. And if you want to hear about the stocks that I'm trading in real time, get my trade alerts, my daily trade plans, and even watch the same scanners that I'm watching in real time, there's going to be a link down below to come join us in the Market Master group. Anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.